Hi, everyone. My name is Davis Geed, and I'm the leader of the analytics practice at Alexander Group. With me today is Parker Thomas, a business analyst on the team. Thanks again for joining us for the final installment of our Sales Asset Utilization video series, which focuses on providing revenue leaders the tools they need to ensure that their sales forces are as productive and efficient as possible. In today's video, we'll talk about the fifth and final point in our framework, results. The previous 4 videos in this series have focused on organizational performance levers that lead to different results. Today, when we talk about results, we're referring to the key metrics that revenue organizations use to understand whether they've pulled the right levers and where to focus additional resources for continued improvement. Results metrics are best measured at a regular interval, typically before and after a major organizational change has occurred. So today, we again direct you to Alexander Group's revenue growth model, a framework that encapsulates the functions of the revenue organization. The framework is broken into 9 pillars aligned to 3 key functional areas: sales strategy, structure, and management. So the question is, what do results tell you about your sales asset utilization? As we see it, the right outcome KPIs measure success across all of these aspects of the go-to-customer model to help you identify and implement the right changes. So to tell us a little bit more about how results relate to each of these areas, I'm going to turn it over to Parker.
Thanks, Davis. First, we can think about some of the key business questions which you can look to your results to answer. Your balance of profitability and growth speak to the overall effectiveness of your revenue growth model and your current growth stage, for example, being more startup growth mode versus late stage low growth optimization. The breakdown of your conversion, penetration, and retention revenue, or CPR as they are called together, speaks to how well you succeed at hunting and farming activities and the customer-facing roles you need to have in your organization to be successful. Your quota attainment and distribution indicate how balanced your reps' performance is and what that might mean for your sales force satisfaction, motivation, and turnover. To answer these business questions, we need to gather the right data. Here are some sample results metrics that we suggest our clients measure and manage to on a regular basis. Within profitability and growth, we can look to revenue growth, target achievement, and overall margin. To understand new and existing revenue mix, we can look to the percent of revenue from new customers, the account expansion rate, and the renewal rate. And lastly, within goal achievement, we can look at percent of reps making quota and quota distribution. To understand results-driven sales asset utilization in action, consider this scenario. An organization benchmarked its sales performance to market, and these were the diagnostic results. First, they observed that their expense to revenue ratio was 30% below benchmark. Now, while this can indicate high efficiency of the sales model, in this case, it represented underinvestment, as the account expansion rate was found to be 20% below the benchmark. Based on these results, the organization moved to implement a few changes. They decided to invest in building out a sales ops team to optimize planning and support staff to take on non-selling tasks for sales representatives. Within alignment, they were able to direct sellers to engage customers more frequently with the newly freed up time. Within execution, they decided to invest in increasing variable incentives to drive more pay for performance. And lastly, in perception, they leveraged the newly built out sales ops team to address key enablement gaps identified in a sales readiness assessment. The post-transformation results showed strong improvement across the identified areas. Notably, strategic investments in headcount and compensation were able to align the expense to revenue percentage to benchmark range. And account expansion improved 15% above benchmark due to optimized sales asset utilization.
Thanks, Parker. Very interesting to see those results in practice, and in particular, what levers organizations can pull to positively influence their results. Thanks again for viewing the final installment in our Sales Asset Utilization series. To make sure you're utilizing your sales assets most effectively, you need the right data, the right context, and the right expertise. Please visit our webpage at alexandergroup.com to contact us and learn more. And if you haven't already, please view parts 1 through 4 in our Sales Asset Utilization series. Thanks for watching.